Hi everyone, welcome to Hitwise's webinar on uncovering the retailer black box. Over the next hour, we will go through top online challenges for retailers and brands, as well as look at the impact of Amazon Prime Day to the wider retail industry, and finally conclude with recommendations on how to optimize and improve retailer and brand partnerships. But before we get into that, just a few housekeeping rules. The presentation part of our webinar will last for around 30 minutes and we'll then proceed with a Q&A session. So please, during the webinar, please feel free to submit any questions you have in the chat box. And if we're unable to get to your question, an account manager from Hitwise will try to get back to you as soon as possible. Before we get started, firstly, a quick overview of Hitwise. We're an online measurement and audience targeting company that helps clients connect and grow their customers. Our strengths lie in our data, which is derived from a sample of over 3 million panelists, half of which are on mobile devices. This is then modeled out to account for the online general population in the UK. Our data depth includes millions of websites and keywords, as well as thousands of consumer attributes and market research variables. Our data frequency as well allows us to report as granular on an hourly basis through to year-on-year trends. These strengths allow us to provide actionable consumer insights to our clients and at accuracy and with speed. Firstly, my name is Lisa Liu. I'm the Head of Insights at Hitwise. I've been with the business for almost 2 years now. For today's webinar, I'll be co-presenting with my colleague, Ben.
Hi guys, I'm Ben Fernando. I sit within the research and analytics team as an analytics consultant. I've been with Hitwise for the last 3.5 years, and I've been working in data analytics for 6 years. So first of all, let's take a look at what Lisa and I will be covering today. So firstly, we'll be aiming to explain what our definition of the retailer black box actually is. We'll go through some interesting stats and trends to show you how the retail landscape has been changing and why it's so important to be talking about this now. We'll then go into what happened during Prime Day, which was a few weeks ago. Obviously, it's an Amazon event, so we'll look at how well Amazon performed and what was trending, but we'll also look at the impact on retailers. There'll hopefully be some learnings from this of what can be expected in the upcoming peak period later this year. And it will also highlight the further needs to uncover the retailer black box. We'll then go through some interesting case studies which aim to uncover the black box and go into the challenges that retailers and brands face on a day-to-day basis. I'm sure many of you today will be familiar with some of these. We'll then take some of these learnings and apply them from the case studies to provide recommendations for you to consider during the peak period. We'll look at what you need to know in order to answer the challenges faced by retail and what actions you can take once you have this information from both a tactical and strategic point of view. So firstly, what is the retailer black box? And more importantly, why are we talking about this with you today? So it's no secret that the retail landscape has been evolving and changed in recent years. Almost every other week, we hear of another company failing and falling into administration or closing stores across the country. We're currently on course and expect this year to be the biggest in terms of the number of companies failing, so going into administration or filing for bankruptcy. We've already had massive companies such as Toys R Us, Carpetright and Poundwell fall into administration this year alone. We've already seen the number of stores affected in 2018 so far surpass the volumes that we've seen in 2017 and previous years. And household names are announcing, again, almost on a weekly basis, store closures across the country. And obviously, this helps from a short-term perspective, helping to reduce costs and increase profit margins. But there's obviously a longer-term strategy behind these businesses and why they're taking these decisions in order to adapt to what's going on in the landscape at the moment. So let's dig into this. So we've seen retail footfall, which is data we've acquired from Springboard, has seen a consistent decline each month, whereas online retail traffic continues to grow. The disparity between the two traffic sources was larger largest during March, which is when we saw the turbulent weather, so the beast from the east. With the largest year-on-year drop in average temperatures, we also saw the largest year-on-year drop so far of retail footfall. Since then, however, we've had a fantastic spring where footfall has recovered, but online is still very much driving growth for the industry. So if we dig into the retail landscape and look at who's receiving traffic, we can see quite quickly from this slide that the landscape is dominated by only a handful of players. So the top 10 retailers listed here account for almost half of all retail traffic online over the past year. And in particular, Amazon dominates with 25% of all retail traffic over the past year. So the e-commerce landscape has created a dependency of brands on retail sites to generate sales. And as a result, brands have to have a blind spot, when it comes to their online performance. And we call this the retailer black box. So to begin with, from a brand perspective, you might not know how your customers are searching on retailer sites, and this can make it difficult to optimize and target effectively in order to acquire retailer traffic. You also might not know how your products are performing in your category when you compare to competitors, and this makes it difficult to really understand how well your brand is performing and how it could perform. You may also have a vague idea of which retailers you should partner with, but you don't know how well that retailer truly performs for your category.
And equally, there's also a blind spot for retailers as they need the best brands to compete online. So this brand's blind spot includes not knowing how their categories stack up against the competition, and equally important, not knowing how their products and brands perform, or what are the gaps versus their competitor retailers. And finally, when it comes to merchandising decisions, these are probably based on gut feel, as opposed to data-driven through competitive intelligence. And why are we talking about this right now? Basically, Amazon's ambitions are big, and they're buying companies at an unprecedented rate over the past year. This includes the acquisition of Whole Foods for $13.7 billion USD, basically showing their bid into the groceries and brick and mortar sector. Since then, Amazon has also acquired a number of other smaller smart tech and AI companies, including Body Labs, Blink, and Ring, really amplifying their Amazon smart home offering. And more recently, just in the past month, Amazon has also acquired PillPack for $1 billion USD. And although this company is a bigger player in the US, it really shows Amazon's aspirations to enter into other industries, specifically pharmaceuticals. So on top of their acquisitions, Amazon is also growing in share as a search engine. So when we look at on-site search on Amazon in the month of June, sessions on Amazon have grown by 37% year on year to reach over 350 million. To compare, Google's volumes, they are much higher at almost 2 billion visits in the month of June. But when we compare year on year performance, this has dropped by 22%. So what does all of this contextual data tell us? Retail has had a challenging start to the year, but online is really driving growth for the industry. But when we zoom into the online landscape, only a handful of retailers dominate, particularly Amazon, with a quarter of retail traffic. Amazon's recent movements and the string of acquisitions over the past year show that the e-tailing giant has ambitions to grow and expand even further. This has all created a blind spot and dependency between brands and retailers when it comes to online performance. Which brings us onto our next section around Amazon Prime Day. So in this next part, we're going to highlight some key online stats, as well as provide some of our thoughts on what we expect for this year's Cyber Week. Firstly, in terms of overall numbers, Amazon Prime Day started on the 16th of July, so only a couple of weeks ago, and lasted for 36 hours. It broke all records, exceeding the $1 billion USD in total sales, which was set in 2017. When we zoom into online performance, visits to Amazon's site over these 2 days reached over 89 million in the UK, with almost 7 million transactions being processed on the 16th and 17th of July. When we compare this to last year's Prime Day, these figures are up by 10.4% compared to last year. So let's zoom into actually what consumers were purchasing over Prime Day. And as expected, Amazon's own devices, which have the heaviest discounts, dominated in terms of purchases. Amazon's devices accounted for 6 out of the top 10 products purchased on Prime Day, with the Fire Stick and Echo Dot dominating, with over 30,000 purchases over these 2-day periods. So we expect this also to be the case with the next big promotional period coming up over Cyber Week. But something else also interestingly that was shown over Prime Day was that Amazon's ambitions for other categories are also growing. So this chart shows the week-on-week purchases from Amazon in the previous week. Amazon's devices grew by over 2,000% in purchases. But a number of other categories, from video gaming, electronics, pantry, which this year included Whole Foods, as well as clothing and accessories, grew by over 100% when it came to purchases. So really this data tells us 2 things. Amazon is heavily promoting not only their own devices, but also a number of other categories on Prime Day, likely wanting to expand their presence and reach in these other verticals. As well, consumers of these categories are probably more price sensitive than others, for instance, like health and beauty, which didn't see such a huge week-on-week rise. In other words, these consumers were waiting the week before to make their purchases on Prime Day.
So that's great. We've looked at Amazon and how they've performed and what's trended on the site during Prime Day. But what about other retailers? So again, if we look at comparing week-on-week data, the week before Prime Day and the week of Prime Day, we can see that Amazon saw the biggest leap in total visits, up 38% when compared to retailers such as Currys and eBay. But actually, we know that Currys also went out with counter deals and campaigns, and they actually saw a larger increase in purchase and conversion rate when compared to Amazon, although the volumes would have been smaller. But there are some retailers like eBay who didn't capitalize, and they saw flat results week on week and even a slight dip in conversion. So we've seen with this data the influence and dominance that Amazon has on Prime Day, but one thing to note is it's not just about focusing on Amazon, it's about understanding what other retailers are doing. So with Amazon's 100 million plus members globally, their exclusive deals not only spurred purchases of their own devices, but also showed their intent to grow and expand in other categories such as clothing, food and electronics. And we've seen that other retailers such as Currys have jumped on the bandwagon and have benefited from a momentary uplift in sales. This is just an example of what we would expect to come in this year's Cyber Week.
Which brings us on to our next section covering our recommendations. So how can we uncover this retailer black box? In other words, how can brands and retailers remove their blind spot when it comes to understanding their online performance? Firstly, by tracking Amazon's movements and putting this into context and aligning this with their ambitions. So in this chart, we're looking at the 4-month period from February to May. As we can see, Amazon's page views and purchases have grown for a number of key categories. In particular, sports and leisure has shot up. Purchases have gone up by 69% over this period. And as well, clothing and accessories have shot up. But interestingly, page views have grown by 50%, but purchases rising by only 38%, suggesting that consumers are more browsing than actually converting in this particular category. But we need to put this data into context. For instance, we need to understand the wider industry and how these movements on Amazon stack up against other retailers. And as well, understand what brands and products are driving growth in these particular categories. So this is where competitive benchmarking by category helps put Amazon's growth into context. In this chart, we're looking at clothing and accessories and comparing Amazon with two other top retailers, Debenhams and John Lewis. On the left-hand side, Amazon has by far the largest volume and growth in terms of page views, rising by 50% from February to May. But when it comes to actual transactions for this category, Debenhams wins out and also saw an equal rise of 38%. John Lewis, on the other hand, has a much smaller volume in terms of page views and purchases, but saw still a significant 60% increase in transactions over this period.
So let's take an example. If I was in the merchandising team at John Lewis and I had this information, I'd want to understand, great, I've got faster moving purchases compared to competitors such as Amazon, Debenhams, but I want to increase volume and I want to figure out what's trending and how I improve my performance. So firstly, I'd want to understand which brands are behind this uplift and are driving competitors' trends, and then compare these brands with my portfolio of brands. So for instance, on Amazon during May, purchases for several summer fashion and accessory brands grew, including the likes of Birkenstock, Siggy, FitFlop, and Ray-Ban. And as John Lewis, I know we may not stock a brand such as Siggy, but we do stock the likes of FitFlop and Ray-Ban. But we have seen smaller or declining month-on-month movements when compared to Amazon in May. So that's great, but then I would want to dig a little deeper and understand which products are driving the trend behind each of these brands. So let's take Siggy first, the brand that I know that we don't stock currently. So most of their traffic or the trend came from products such as summer hats, which saw over 200% growth on Amazon. So I could take a number of actions knowing this sort of information. Firstly, I could simply look at adding a brand such as Siggy or similar to our portfolio to try and capitalize on this trend. Or I can look at our existing portfolio and understand if there's any brands within that portfolio that currently have similar products and try and focus and promote these. Secondly, for the other brands, FitFlop and Ray-Ban, which we do stock, we saw shimmer denim sandals and unisex sunglasses, for example, rising significantly on Amazon. And since we stock these brands, I would look at like-for-like products within these ranges in order to win traffic from Amazon.
Secondly, conversion data. In other words, understanding the rate in which people go to product views to purchase also shed another level of insight. Looking at the electronics and mobile category, again comparing Amazon with two other top players, Argos and Tesco, we can see that Amazon again has the biggest volume in terms of total purchases. So in the month of May, over 4 million transactions were made for this particular category. But when we look at conversion rates, Argos has a significant higher product view to purchase rate, converting at 8.7% for the like-for-like category, compared to Amazon at 4.8%. Again, so if I were a brand, Amazon, for instance, would potentially give me more reach, but also more competition, whereas Argos would likely bring me a higher cut through in terms of purchases.
So let's take another example. Let's say I was managing retailer partnerships for Philips, taking a lot of responsibility on in this webinar. And one of my objectives is to increase the retailer sales for one of our core product lines, electronic toothbrushes. Typically, we'd only receive this level of data on your screen now, so total purchases. And in this example, I can see that Amazon outsold Philips electronic toothbrushes compared to Argos and Tesco. But when we add a deeper layer of contextual information, looking at basket rate and confirmation rate, we can get a more in-depth view of our performance. In this example, we can see that Amazon is converting the most to basket page, but sees a drop-off between the 37% basket rate to 19% confirmation rate. So there's potential improvement there. Tesco, on the other hand, concerningly, has seen no purchases for the Philips toothbrush pages during this period. So that's great. I've got some more context to my performance, so I can make some potential actions off the back of that. But there's still potentially more information I would want to know. I'd want to look at how our competitors are performing on these sites as well to get a benchmark. So if we include one of our main competitors, Oral-B, we can quickly understand where we should be and how we stack up on each of these sites. So for example, on Amazon, our 19% conversion rate seems pretty high, seems pretty good, but actually Oral-B is generating a higher conversion rate at 22% and also a lower basket rate, which means the drop-off between basket to confirmation for Oral-B is lower. So as a Philips member of the team, I would look at responding by trying to promote and drive activity on Amazon in order to increase my conversion. On Tesco, we saw that there were no sales, and obviously that paints an alarming picture. But when we include Oral-B, we can see it's the same thing happening to them. So what would I do? I'd probably want to either reduce the stock that I sell on Tesco, maybe put more spend into another retailer, or I'd want to reevaluate my overall partnership with that retailer.
And thirdly, top of the funnel metrics like on-site searches helps us understand the full customer journey on a retailer's site. So as we saw in a few slides earlier, Amazon, when it came to sports and leisure, the category has seen enormous growth over this past year. So in this chart, we're comparing Amazon's search share for 5 of those top brands driving growth in that particular category, including Mountain Warehouse, right down to Berghaus. A couple of call outs here. Mountain Warehouse in the month of May saw almost 500,000 hits from Amazon on-site searches, which was a rise of 33% from April. But out of this 5 brand set, Coleman, although at lower volumes, saw the largest growth at 92% in terms of Amazon search traffic. So let's say we were brand number 2, Regatta, and we manage Amazon's relationship, and one of my KPIs is to optimize our products and visibility on Amazon sites. We were top placed on Amazon search traffic in April, but we have since been displaced by Mountain Warehouse in May, and Coleman, they're fast on our heels, growing at a rapid rate. So using top of the funnel data, we can then try to understand why this is the case.
So firstly, let's take a look at the searches driving traffic to Mountain Warehouse product pages on Amazon. So at Regatta, I'd want to look at the searches that are driving traffic to a competitor's product pages. So we look at Mountain Warehouse and their top 10 searches. Out of these top 10, only 1 was branded. So there's some opportunity there in order to win back traffic. So Regatta could place a sponsored ad on trending generic searches or popular searches, such as in this case, winter boots for men, men's long sleeve t-shirts. I could also consider auditing or optimizing my product pages, my Regatta product pages on Amazon, to make sure they're in line with how people are searching on Amazon. And secondly, as Lisa mentioned, we saw Coleman there, the fastest mover amongst the 5 brands we're comparing to. So in May, Coleman saw biggest uplift from Amazon in terms of searches from keywords such as shelters, coolers, and tents, which kind of indicates they're potentially focusing on a particular product range in order to drive growth and sales. So at Regatta, I could identify these product areas as growth areas, and I could again optimize these search terms to redirect traffic to our product pages and away from Coleman. So we've just gone through a few case studies on how to uncover the retailer black box. And in summary, competitive data from top of the funnel, like on-site search, to bottom of the funnel, such as purchases and conversion rates, helps drive and inform e-commerce strategy. And the main point to consider is that these insights need to drive tactical actions in order to improve sales through third parties. This brings us to our final section. So we'll be summarising all the key tactics that we've just seen in that last section and trying to apply those to the peak period. So we'll be providing recommendations and considerations for Cyber Week and Christmas. We've whizzed through a lot of retailer analytics data, but we summarised the main takeaways if you're a brand or if you're a retailer. So firstly, if you're a brand, by knowing how consumers are searching within your category on a retailer site, you can do a better job of optimizing to make sure that you're appearing more frequently on retailer pages, as we saw in the regards, for example. By knowing how your customers are selecting products from search, you can also target the right keywords with sponsored ads to increase click-through rates. Also, by knowing how your products or competitors' products are converting, you can focus your efforts on the highest converting products across the right retailers, as we saw in the Philips example. And by knowing which products are trending, you can make optimization across your portfolio to address certain gaps based on trends. And then by knowing which retailers perform best in your category, you can make more informed decisions when it comes to strategic partnerships with retailers. So focusing on the best, not just the biggest.
This data is equally important for retailers, knowing how their competitors are performing. So for instance, by knowing how consumers search and view products on competitor sites, as a retailer, you can address gaps in consumer demand on your own site. By also understanding how your like-for-like products are performing against the competition, you can translate this into tactical actions, such as pushing product promotions to win traffic back, as we saw in the John Lewis example. Through this data, we can also understand which products are trending on competitor sites to address any gaps that we might have in our product range. And equally important, be able to track and identify brands that are on the rise on competitor sites, which will allow us to make strategic partnerships with the best and not necessarily the biggest brands. And finally, on more of a contextual point of view, we can track how our categories are benchmarking and performing in the long run against the competition, which will allow us to protect and grow our category share. So this concludes our presentation part of the webinar, and we'll now move on to the Q&A section. But before we do that, just a few things to look out for in our Hitwise marketing calendar. We'll be following up this presentation with some comms around our cross-retailer analytics proposition, as well as over the next couple of months, release some of our insights around Cyber Week tactics, fashion report, as well as our back-to-school performance. And one other point to note, we'll also be sending this presentation deck as follow-up afterwards as well. So let's take a look at some of these questions. Okay, this one for Ben. Nice example on Regatta, improving search on Amazon. Do you have any real examples of a brand taking action off the back of your data?
Yeah, so if we're focusing on search on Amazon in particular as well, so I worked with a client earlier this year. They wanted to understand, they have a proposition in terms of direct sales on their site. They have an e-commerce section on their site, but they also know that a lot of their business came from key retailers such as Amazon, Argos, etc. So they wanted to dive a bit deeper into how people were searching for their category online. So this client was in the antivirus software space. We found that on most retailers, people were searching from a generic point of view for antivirus software. However, I believe this brand, their products were called Internet Security. So it'd be the brand name, then Internet Security 2018, etc. And it appeared that for at least one of the retailers, whenever you typed in antivirus software, it was only competitor products that were appearing and not this brand in particular. So obviously or several of the actions they could take off the back of knowing that were they could either look to optimize the product page, but if that's not an option in terms of they don't want to change the name of the product, they could look at either sponsoring those searches and putting promotional placements across those search listings to make sure that they do appear alongside those competitors. But also, if I was that brand, and I think this is what they wanted to do, they'd speak to that retailer to make sure that they do appear for those searches because they were a large part of their business. So that was an example of a client who's used our data effectively in this regard.
And I think your last point really shows the difference between being able to do search on Google or find search insights through Google and search insights within a retailer because of the actions that you can take off of the back of that. For instance, through sponsored ads, trying to optimize your product placements on a retailer site as well.
Exactly.
Okay, so another question, not something that, well, we do get this one quite often. Do you use cookies to get your data? So I can take that one. No, we don't. We don't use any cookies. We don't use any personal verifiable data. As we saw in our methodology slide, our data is firstly extracted and based off of a sample of 3 million opt-in panelists. And because of the large size of our sample, we're confident that we can then project that and model that out to the online UK population. And because of the frequency and data depth, we're able to report this on a frequent basis, but also within retailer sites as well with confidence.
Yeah, so our methodology, obviously, as Lisa said, is completely anonymous. We don't receive any personally identifiable information from our partners, which kind of answers another question we've had around whether our data is GDPR compliant. So yes, it is, and it has been since before the kind of regulations came into effect in May. That's because, like I said, we don't receive any sensitive information about individuals. All the data we receive from our partners is opt-in. It's completely anonymized, and we never report on individuals. And it's key to kind of understand that we base our technology on what we can see within the URL. So that enables us to break down a site, like Lisa said, look past just the overall domain and look at individual pages, searches that are taking place. I've got another question. So on the Prime Day slide, the year-on-year trends, are we looking at calendar dates year-on-year or Prime Day versus Prime Day year-on-year? So in brackets, it's got, as last year, it did not fall on the 16th.
Good question, and it would be a mistake if we did that, but we didn't. So we compared Prime Days, which was this year on the 16th and 17th. So on those trending charts, we've compared the Prime Day last year, which fell on the 9th and 10th. So looked at the days leading up to two of those Prime dates. So it's not calendar on calendar. But something that we did pick up was that last year, the sales went on for 30 hours. This year went on for 36 hours. So we were expecting to see growth, but probably not to the extent that we saw.
Similar question. You shared week-on-week category splits before, during, and post Prime. Do you also have this split for Prime Day specifically? So in short, yes, we can get down to daily level. As Lisa mentioned, in some instances, we can get down to hourly, but only for very high level kind of category and website metrics. So yeah, we can do daily splits as long as the depth in our data is there.
Yep. So that slide where we looked at week-on-week purchases, that was comparing the 16th and 17th compared to the previous week, which was the 9th and 10th. So I got that wrong. Last year's Prime date was actually the 10th and the 11th of July, but don't worry, our data is correct. Yeah, I just mixed up those dates. Yeah. So yes, we can go individual by day-on-day basis as well.
But we just focus on those 2 days anyway.
Yes.
Cool. Do you have any insights you can share on retailer.coms and beauty? So I guess if I'm understanding the question correctly, so we've got obviously the data we show, most of it was just for the retailer sites, but we can look at other e-commerce sites. So we can look at brands themselves or specific pure plays in markets. So within beauty, we can look at not only kind of the multi-channel retailers such as Amazon and Argos, but we can dive into the likes of Feel Unique, Boots, Superdrug, for example, within the beauty space. I guess that's quite a high level question in terms of, do we have any insights? If you've got, I guess, a more specific question in terms of what you're trying to look at and understand, it's probably worth picking that up with one of our account managers off the back of this presentation.
Yeah, definitely. And also, we also did a webinar last year around beauty tactics for brands and retailers. So I encourage that person to also take a look at what we published last year as well. Do we have any more questions?
Just wait
1 second.
So do you see the impact Prime Day had on other retailers other than Currys and eBay? Is it a trend for traffic and categories?
We did, and there was other retailers that saw a drop when we looked at that week-on-week performance. Basically, for a retailer to attract that level of traffic, which was 89 million visits in just 2 days, it would obviously have a negative impact to other sites and to other retailers not seeing that as well.
Yeah, so we in this presentation, we just highlighted obviously another retailer who counteracted and came up with kind of campaigns to protect themselves and try and grow and take benefit from what Amazon was doing. We also looked at another retailer who obviously didn't really do enough if they were doing something. But there are other retailers we saw kind of similar trends, both positive and negative, across Prime Day.
Great. I think that wraps up the question portion. Again, we'll send around the presentation deck, but if you do have any other questions, please feel free to give us a shout or contact us if you wanted to discuss further about our retail analytics proposition. Thank you again.
Cheers, guys.
Bye.